Well, I think that over the course of a decade, Bitcoin's 170% a year, every year for a decade. NASDAQ is 19% every year for a decade, and the S&P is 14% every year for a decade. So if you look at it like that, the market is, and gold, by the way, is, you'll love this one, minus 0.06%, minus 6 basis points a year, every year for a decade. And long bonds, 240 basis points. I mean, the conclusion you come to is pretty clear. If you can stomach the volatility and the novelty of Bitcoin, you're getting paid 10x. If you can't stomach it, you sit in the S&P index. And, the other things are speculative. And if you're a VC or a speculator or a trader, you can deal with that. But the reason I think that Bitcoin is compelling is, first of all, it's pretty clear that gold is broken. Bitcoin is digital gold. It's not broken. We just had the senator from Wyoming go on national television this week and state pretty much that. And so we know that it fills the niche of digital gold, and there's going to be an avalanche. There's $10 trillion still sitting in gold, right? If you're still believing in gold after a decade of minus 6 basis points, you just must not like money, right? Either you don't read charts, you don't, like, how many years of your life are you going to wait and fail before you admit it doesn't work? Because if I walked you into a house with no electricity for 10 years, I think you'd figure out that you can't turn on the lights at some point. So the first issue is gold is busted. And I think the second thing that's compelling about Bitcoin is the big tech trade looks crowded and overdone. I mean, if you go and you pull, what's Amazon stock right now trading at? It's Amazon's at 33.84, and that's exactly where it was a year ago, Brett. Okay, so with big tech, it's like the real question here in an inflationary economy is where's the risk? Apple's got supply chain risk. They just cut their iPad manufacturing in half because they can't get chips. Amazon's got unionization risk. What happens when 1.5 million people unionize, right? And they've also got supply chain risk. And, you've got Google and Facebook, they've got regulatory risk. They're getting banned in China. They're getting reviewed in the US, and they're getting fined billions of dollars throughout the world. So if you're looking for no risk, or you're running away from risk, the truth of the matter is the lowest risk thing you can possibly buy right now is Bitcoin, because there's no CEO, there's no corporate headquarters, there's no product. The product is simple. It's 1/21 millionth of all the money in the network forever. That's the product. So you're getting away from the board of directors and the employee base and the regulatory nexus and the competition. And you already know there's a demand for a non-sovereign store of value. And if you're waiting, right, fundamentally, it has to pass, if you're an institutional investor, anything you invest in has to pass the MicroStrategy test. And that test is 3-part, Brett. Will it be copied? Will it be banned? Will it be hacked? And we talked about this a year ago when I met with you guys. It's like, well, Bitcoin, will it be copied? 10,000 times, every one of them a failure. There's nobody with a straight face that'll tell you they've got a Bitcoin substitute. The proof of work network and the approach, the ethos and the engineering and the protocol makes it very unique as a non-sovereign store of value. So it won't be copied. Will it be hacked? No one can hack it. Will it be banned? Well, you might have wondered a year ago, but after Christina Lagarde, Jerome Powell, all the senators, all the Congress people, the Secretary of the Treasury, right, and the head of the SEC just noted it's all digital property. It's scarce. They might say speculative. It's a speculative store of value. But if it wasn't speculative, it would be trading at $10 million a coin right now. So The only thing that keeps it from going up by a factor of 100 is the fact that it's quote unquote speculative. But otherwise, it seems to me it's a lot more risky to buy gold. It's a lot more risky to buy a company, a stock, even name a big tech monopoly that's safe. Okay. Well, because if you're a monopoly, you're not safe. If you're not a monopoly, you're not safe for a different reason. So I think that the best thing you could possibly have is the volatility that keeps all of the conventional thinkers out of the asset, because that gives you a chance to buy it cheap. So first of all, let's just put it in perspective. Bitcoin's the best performing institutional grade asset of the year to date. It's up 344%. And that's an acceleration of 2x over its growth rate for the past decade, which was also the most impressive performance. So I kind of, as an aeronautical engineer, this is like going through the speed of sound. If we went any faster, we'd rip the wings off the airplane. Like if you have any experience with a boat or an airplane or an airfoil, there's a certain speed you can get to, at which point you just start to rip the wings off, or you start to move against the forces of nature. And I think if I said to, you're saying to me, well, we're disappointed. I think, first of all, a lot of people, publicly traded companies, have a problem holding the property. And the problem holding the property is either it would take about a year, 6 months to a year, to establish a relationship with a crypto custodian. When you go to set up your Coinbase account or a Fidelity account or whatever, if you're publicly traded, you've got armies of lawyers and accountants going through due diligence and compliance check and security check and the like. I mean, bear in mind, most of these companies, most people that trade stocks have been using the same broker for 20 years. Most institutions have been using the same broker for 30 years. So having to actually come up with a new broker, a once in 30-year thing, I think that slows people down. I think the second thing is the FASB accounting treatment of indefinite intangible. It's hostile and prejudicial to a CFO or CEO that has a optically pristine P&L or balance sheet. If I buy $1 billion of Bitcoin, it goes down by 50%, then it goes up by 20. I report to the world that I have 500 million in assets and I had a $500 million operating loss, even though neither of those things are true. What I really have is 10 billion in assets and a $9 billion investment gain.